Did you know that prominent investor Cathie Wood recently dropped a huge bombshell regarding the future of Tesla stock? Since Tesla virtually always has unexpected news to report, whether good or negative, it is not that surprising when there is news concerning the firm. Continue to watch and listen to see what Wood has to say. Following the public release of the company's second quarter financial report, Tesla's stock price rebounded to the $700 range. People began to question whether the EV company's stock was still declining and when the prices would eventually rise as a result of this. Today, you will learn about a huge revelation made by Cathie Wood on the future of Tesla stock. Fans of Tesla who monitor the company's stock price multiple times a day are aware of the tremendous volatility of the price. The majority of investors have been concerned about this as the EV company's stock does not appear to be recovering from its decline. Nonetheless, a lot of investors continue to be optimistic about Tesla and hold faith in its future. Cathie Wood is an American investor, a renowned stock picker, and the founder, CEO, and CIO of ARK Invest, a $60 billion asset business that makes investments in cutting-edge technologies including genomics and self-driving cars. Wood is frequently referred to as the most underappreciated investor in the game because, in addition to being extremely convincing in her investment ideas, she also has a track record to support her remarkably astute assertions. Cathie Wood, CEO of ARK Invest, has revealed shocking information on Tesla stock. Wood is well known to Tesla enthusiasts, and the majority of them follow her counsel because she has accurately predicted the company's stock rise through 2019 to 2021, as well as the years before. Many people think that Wood's recent acquisition of an extra 3,000 Tesla shares is the big reveal that will cause the company's stock prices to surge once again. Given the current state of affairs and the company's stock price, which is in the $700 range, Cathie Wood's move appears to be a major gamble for many. Nonetheless, the well-known investor remains secure in her belief in Tesla because she is a strong proponent of the EV startup's innovative ethos. Tesla is the industry leader for electric vehicles thanks to its creative ideas and attention on R&D. Wood is especially pleased with Tesla's response to issues brought on by the COVID-19 outbreak. In order to keep its factories and plants operating during the pandemic, Tesla rewrote its software and switched suppliers while other manufacturers and companies struggled with chip shortages and supply chain delays. Furthermore, Austin and Berlin now have 2 additional Tesla production plants available. The goal of these additional plants is to boost output in tandem with the Fremont and Shanghai units. These advances may result in higher operating margins and greater manufacturing scale. The opening of Berlin and Austin allowed them to achieve higher gross margins, Wood stated. What we said during COVID-19 about innovation solving problems will move into overdrive. She went on to say that as it develops its autonomous driving initiatives, Tesla is well positioned to generate exponential growth for many years to come. In actuality, the public now has access to an open source valuation model for Tesla shares thanks to ARK Invest, which is led by Cathie Wood. According to the company, this strategy offers investors a more transparent method to view the research that ARK Invest has conducted on a significant investment. Updates to capital efficiency calculations, autonomous ride-hail assumptions, and 2026 expectations are all included in the company's 2022 Tesla research. ARK has determined the price of Tesla by 2026 to be $4,600 based on its research of models. The company also came to the conclusion that there is a 25% chance that, in a bad market, Tesla shares will be valued $2,900. And in a bull market, $5,800 in 2026. Capital costs for each additional unit of capacity at Tesla have decreased from $84,000 to $7,700. Formerly, ARK anticipated that Tesla would invest $6,000 to $8,000 for each additional unit of capacity in 2025. However, as of right now, the company projects that it will only invest $2,000 to $7,000 for each more unit of capacity in 2026. But the majority of ARK Invest's excitement regarding the top EV manufacturer is predicated on goods that haven't yet been made available to the public. ARK Invest estimates that in 2026, Tesla's robo-taxi operation will generate over half of its estimated earnings before interest, taxes, depreciation, and amortization EBITDA, and 62% of the company's enterprise value. In terms of earnings, it is anticipated that by 2026, the robo-taxi industry would account for 34% of Tesla's total income, while the electric car industry will account for 57%. In terms of how many cars the company sells, under the worst-case scenario of 10 million sales in 2026, the company would have brought in $372 billion in revenue, a $2,900 share price, and a $3.3 trillion market cap, a compound annual growth rate CAGR of 24%. Taking into account a positive scenario wherein 17 million units are sold in 2026, resulting in $513 million in revenue. Additionally, Tesla's share price would reach $5,800, giving it a $6.7 trillion market cap. A 42% CAGR would be included in that. Large wagers on Tesla's future are made by ARK Invest. Tesla is the second largest stake in the whole portfolio of the ARK Invest ETF, trailing only Zoom Video's EM. Approximately 6% of the fund is made up of Tesla, whose shares were bought for between $256.67 and $326.30. Do you believe that ARK Invest and Cathie Wood's forecast for Tesla shares is likely to come true? Please share your thoughts with us by using the comment area below. However, Tesla appears to be making an effort to allay investors' worries. In actuality, Tesla has shown itself in the first and second quarters of 2022, and investors are keeping an eye out for future developments despite the current decline in stock prices. Actually, Tesla added to its auto assembly factories in Shanghai, Texas, and California on March 22nd when it formally launched its German facility close to Berlin. Additionally, Tesla revealed plans to split its shares at its 2022 annual meeting, subject to stockholder approval, in order to increase the authorized number of shares. This information was released on March 28, 2022. Tesla's first quarter earnings announcement showed a record-breaking net income of $3.3 billion, above Wall Street projections on the heels of an 81% year-over-year increase in revenue to $8.8 billion. In the automaker's most recent financial report for the second quarter, earnings per share came in at $2.27 instead of the $1.81 that Wall Street had predicted, and revenues of $934 billion, roughly $400 million higher than what they had anticipated. Tesla shipped over 900,000 cars in 2021 alone, with plans to boost that number by 50% this year. In the upcoming quarters, the corporation hopes to deliver even more. Indeed, Elon Musk, the CEO of Tesla, revealed on the company's Q2 results call that the company's new Austin, Texas facility is expected to surpass the 1,000 cars per week that it produced in June at its new location outside of Berlin, a weekly output milestone of 1,000 during the next several months. Tesla's delayed intentions to start producing its electric Cybertruck saw the opening of its Gigafactory in Austin, Texas in April of last year. Declaring to the 15,000 guests he invited to celebrate the launch, "We are really entering a new phase of Tesla's future," Musk said. Musk stated that Tesla hopes to begin shipping the Cybertruck, an experimental-looking pickup, in the middle of next year during the company's second quarter results call last week. The information about Tesla that was previously mentioned demonstrated how the business prospered in spite of multiple obstacles, demonstrating that Tesla defied expectations and has a great deal of potential for future success. Indeed, Elon Musk's company has fared better than its rivals in enduring disruptions in China caused by the COVID-19 pandemic, increased material costs, and disruptions in global supply chains, according to the data provided to investors in the company's most recent financial report. Expectations for Tesla's production combined with strong demand for its cars around the world provide a strong argument for holding on to Tesla shares. A Tesla supporter restated their recommendation to buy the stock, citing strong revenue growth until the end of 2022. It is important to remember that while these projections are the result of in-depth research by specialists, a variety of economic factors also influence stock prices, which could have an impact on these forecasts as well. Having said that, it's crucial to carry out independent research before making a significant investment decision. Legendary investor Ron Barron once stated, "The only way you can possibly believe and possibly come up with a good opinion is to go do the research yourself." You can't rely on other people telling you what to buy or what to sell. Check out our other videos on our channel for more information about Tesla stocks.